What if I told you the biggest buying signal in crypto is not price? It is not a green candle or a breakout. It is money that hasn't even moved yet. If you learn how to track where that fuel is sitting, when it is rising, and when it is being deployed, you stop chasing pumps. You start entering before them. Let's start with the basics. Total market cap structure. It shows the size of the entire crypto ecosystem combined. It tells you whether the whole market is expanding or just one sector. Sometimes Bitcoin or a few altcoins rise while overall liquidity is not increasing. If individual coins rise but total market cap does not confirm, the move may be weak or speculative. Use TradingView to compare current market cap to previous cycle highs. If total market cap breaks previous highs with strong volume, expansion phase is active. If market cap diverges, meaning price rises but volume weakens or structure looks exhausted, caution increases. Distribution rarely looks dramatic at first. It looks strong but unstable. Why liquidity is so important. Stablecoins like USDT and USDC are capital waiting to be deployed. Think of stablecoins as money parked on the sidelines. When someone sells Bitcoin and holds USDT, they are not leaving crypto. They are waiting. When stablecoin supply grows, new capital is entering the ecosystem. To understand the nature, you need 3 simple metrics. Total stablecoin market cap, USDT dominance, stablecoin exchange inflows, total stablecoin market cap. You can use platforms as Defilima or CoinMarketCap. What you look for is total stablecoin supply rising steadily? If yes, new liquidity is entering crypto. If stablecoin supply expands while prices are calm or slightly falling, that is constructive. It means money is entering quietly. If stablecoin supply shrinks while prices are rising fast, liquidity is being used up. That often happens near later stages of rallies. Is the curve trending upward? If stablecoin supply increases by billions while Bitcoin is consolidating, that is often early positioning. You do not buy because price moved. You buy because liquidity is building. USDT dominance, fear meter. You can use a TradingView platform. USDT dominance shows how much of the total crypto market is sitting in Tether. When USDT dominance rises sharply, people are moving into stablecoins. Fear is increasing. Crypto prices are usually falling. When USDT dominance falls, stablecoins are being deployed. Buying pressure is entering. Prices rise. If USDT dominance spikes strongly while Bitcoin drops aggressively, that is panic. Now combine that with stablecoin supply growth. If stablecoin supply is high and USDT dominance is elevated, money is parked. That often creates accumulation zones. When USDT dominance collapses quickly and price moves vertically, liquidity is already deployed. Bitcoin dominance, rotation signal. Bitcoin dominance shows how much of the total crypto market belongs to Bitcoin. This tells you where capital feels safest. When Bitcoin dominance rises, capital prefers safety. Bitcoin outperforms altcoins. When Bitcoin dominance falls, risk appetite increases. Ethereum and altcoins outperform. How to use it strategically. Early cycle. Bitcoin dominance rises from depressed levels. Market recovering from fear. This is where Bitcoin usually leads. Mid-cycle. Bitcoin dominance stalls and starts falling. ETH/BTC chart strengthens. This is where Ethereum rotation begins. Late cycle. Bitcoin dominance drops aggressively. Small caps explode. That is when caution increases. The market moves in cycles. Instead of guessing tops and bottoms, you can analyze the market using a simple behavioral chart. It shows when money is defensive, when money is rotating, when speculation is expanding, when euphoria is peaking. For example, when BTC dominance rising plus BTC rising strongly by Bitcoin. Capital prefers safety before rotating into risk. Bitcoin leads the market. If BTC dominance rising plus BTC falling, gradual Bitcoin accumulation. Risk-off environment. Altcoins usually drop harder. Accumulation phase forming. When BTC dominance falling slowly plus BTC consolidating by Ethereum first, then strong large-cap altcoins. Because it has a healthy rotation phase. Capital shifting from Bitcoin into risk assets. Mid-cycle expansion beginning. When Bitcoin stops moving aggressively and trades sideways, capital looks elsewhere. That elsewhere becomes Ethereum first, then altcoins. This is the sweet spot for alt season. If Bitcoin continues vertical rally, alt season usually pauses. If Bitcoin crashes violently, alt season ends quickly. Funding rates, leverage pressure. You can use CoinGlass for analyzing. Funding rates show whether most traders are betting up, long, or down short. If funding is very positive, too many traders are long. The trade is crowded. Pullback risk increases. If funding is very negative, too many traders are short. Short squeeze potential increases. Do not buy only because funding is negative. Always combine it with other signals. Strong accumulation setup. Stablecoin supply rising. USDT dominance high. Bitcoin correcting. Funding negative. News pessimistic. This alignment often signals smart positioning. Weak/high risk environment. USDT dominance very low. Funding extremely positive. Price moving vertically. Retail hype strong. This signals distribution risk. Why this matters? You are not trying to predict the future. You are measuring liquidity. Liquidity builds before price expands. Most people buy after green candles, but investors buy during silent accumulation. Price is the final reaction. If you understand who is holding, who is selling, and who is withdrawing coins, you can position before expansion begins. For a better understanding of what is happening in the market, I recommend paying attention to those who control most of the market. Exchange reserves. Long-term holder behavior. Whale wallet positioning. Then we connect them to dominance and stablecoin behavior. When Bitcoin or Ethereum sits on exchanges, it is available to be sold. When coins leave exchanges and move into private wallets, that supply becomes harder to sell quickly. Less available supply means reduced immediate sell pressure. Ignore daily noise. Look for trend direction. Remark: not all holders behave the same. Short-term holders react emotionally, while long-term holders accumulate during weakness and distribute during strength. Use CoinMarketCap or Blockchain Explorer. Look at supply held for 6 months or longer. If long-term supply increases during corrections, that signals conviction. If long-term supply starts decreasing during euphoric rallies, that signals distribution. Whale positioning. Large wallets leave on-chain evidence. You track this using platforms like Arkham or Nansen. You are not copying trades, but observing clusters. If several independent large wallets accumulate during consolidation, that suggests informed positioning. If large wallets move coins to exchanges during vertical rallies, that suggests distribution preparation. One wallet means nothing, but multiple wallets over weeks means structure, trend. When people buy Tether, what should you do? When USDT dominance spikes sharply, it means fear. That alignment often signals accumulation. You are not predicting tops and bottoms. You are reading liquidity, behavior, and positioning. Crypto cycles repeat because human behavior repeats. Liquidity leads. Emotion follows. Stablecoins show where money is waiting. Dominance shows where money feels safe. Funding shows where leverage is crowded.